Thank you very much. Thank you, Raleigh. I am so happy to be here, and I appreciate you all taking your time away from your day to spend a few minutes with me, and I hope to share some things that you'll be able to utilize right away. For those of you who do not know me, I'm Wendy Kirkland. I've been a full-time trader for really now about 12 years. I administer a number of advisories, and I've written a number of books, primarily strategy books. And so the one I'm going to discuss today is Price Surge System, uh, swing trading strategy, both long and short. Uh, let's see here. I want to make sure that I mention to you that I will be happy to answer questions. And if you'll um, hold those either to the end of the session, or Raleigh said that he would gather them and then we could discuss them after the presentation. That would probably be the smoothest way. That way I won't get discombobulated and off track, and I'll be able to share the information that I hope to share with you. As I said, what I'm going to do is discuss the patterns from Price Surge System, both long and short patterns today, and go over those details. We all come to the market by different paths. That many of us have someone in our family that's involved, others it's our education, our profession, and many of us come through financial needs. And as Raleigh mentioned, that's what happened to me, that my husband and I, our business that we had owned and operated for 25 years, kind of a high-end gift shop in Biltmore Village in Asheville, North Carolina, was hit by a flood, not just once, but twice in a 2-week period. That first came hurricane, or I guess at that point it was Tropical Storm Francis, and then Ivan hit 2 weeks later, and it truly wiped us out. That not only our inventory and our equipment and cash registers and books and everything, but it also was like our sweat equity. We had everything in that business in the store, figuring someday we'd be able to sell it and retire. And those storms really changed that. So I was put into a position where at 55, I really redefined myself and had to come up with a new way to bring in an income. And option trading was the answer for me for that. And I'm going to go over how that worked. That financial independence was my personal goal, but eventually it became and grew to be more than that, that I wanted to help other people to be able to achieve that same objective. And I did that through writing strategy books. Once I'd achieved success, I figured if I can do it, I can teach other people to do it. And I also do a number of newsletters and coaching, and then the advisory services for people who are not able to trade for themselves. This is your general disclaimer that we have to put out there, and I want to make sure that there's always risk in trading and that you don't trade with money that you can't afford to lose. What I found as far as the elements of success for me, one, and I'm going to go over each one of these, but the first one was the leverage of options. Options allows you to be able to invest with what would be like a down payment, a smaller portion than buying a stock outright, and we're going to discuss that. Also buying weekly and front month options, and then because I approach the market a little differently, I don't necessarily come to it from the fundamentals or having a financial background. I'm an artist, and so I see things a little differently than most people do, and it's kind of odd, but it has proved to be very, very successful. And what I have discovered through these patterns and so on is that I can often trade and get into a trade that doubles in an average of 3 to 4 days. And so let's start at the beginning and take this step by step and discuss options. The normal way that a person trades is one, you start off with an equity, and then you have some pattern or candlesticks or something that is signaling that a trade is going to move in the direction that you want to trade. And then you decide on your option expiration, and these three elements kind of come out the narrow end of the funnel and hopefully give you a profit. Now I'm going to try and give you the keys that are going to send the profits out the wide end of the funnel. And so let's discuss option trading and options. For those of you who are maybe trade stocks or Forex and haven't really delved into options, we're going to just go over this real quick. This is a trade from Celgene, and let's say on September 29th, the stock price was 106.38, and by October 5th, it rose to be 117.90. That's $11.52 gain per share, and that's an 11% gain. That's a hefty gain. On September 29th, the October monthly expiration for the 106 strike call option premium, meaning that you expect the price to go up, costs $4.15 or $415 per contract. On October 5th, the bid premium when you want to sell was $11.30 per share or $1,130 per contract. That's a gain of $7.15 per share. That's 172% gain in those 4 trading days. So what we're comparing, if you were to buy the stock, is an 11% gain versus 172% gain that you achieve through option trading. And that is the leverage. You're able to invest in the same stock and reap the rewards from the movement in that stock, but you're doing it for a smaller premium that would be like a down payment. So let's say that for the total investment of $10,638, which would have been 100 shares of the stock, and it earned $1,100, $1,152, or for the total investment of $415 for the option contract of 100 shares earned the $715. Now for that same $10,000 investment, you could have bought 28 option contracts and earned $20,000. Now not many people would invest $10,000 in any one trade, but this just goes to show you, or to kind of prove the leverage that options give you, that most people trading in just an average type account can manage a $400 trade. And so this just really goes to show and is a good illustration of the leverage that is available through options. So to look at this a little further, that let's see if I can grab a pen here. This is the area where we were discussing entry, and this was the exit. So what I'm hoping that I'm going to be able to show you this afternoon is how you know that this is the area to get in. There was other times that it traded flat and then it dropped, and here it went up and then it dropped again and went flat again and dropped. And so what made this area right in here any different? And that's what we're going to talk about as we proceed. So let's discuss weekly options was the second element of success. So why weeklies? That weeklies are relatively new, and I've kind of been on a campaign to get people to understand them, that they're about 5 years old at this point, 4.5 or so. They've been around longer than that, but the popularity where many people know what they are has been around 4 or 5 years. And this is where I'd like to focus, because there's a lot of advantages that people just don't get. And so we're taught the value of time, and to make sure that we buy plenty of time, so we have time for our patterns to unfold. Well, this isn't the thinking behind weeklies. Actually, it's the reverse. We're not looking for extra time to allow the trade to play out, but providing you have the means, a pattern, to get the direction right, we're seeking the protection against the market's change in direction. We're using the short expiration to our advantage. So let's look at some of those advantages. First off, as I was showing, that they're cost effective. They're a fraction of the cost of monthly options. They offer awesome flexibility. They're a useful trade vehicle for numerous strategies, for calls and puts and spread and covered trades. Long-term trades are subject to market changes. So with short-term trades, you trade what the market hands out. And since weeklies are new every week, you can pick and choose to enter at the exact moment that the action is going to happen, that you don't have to hold through consolidation periods. You can enjoy 52 expiration periods a year. Weeklies are available on the indexes, stocks, ETFs. The exchanges offer options on new companies all the time, and often those create a certain amount of excitement and interest in high volume. And 1 week a month, all optionable equities become weeklies. Weeklies are a short-term chartist dream. All you have to do is ask yourself, where will this equity be in a week or less? The shorter time frame allows for more accuracy. They can be used in conjunction with news announcements, earnings reports, the FOMC minutes. Weeklies remain more reasonably priced during periods of higher volatility. And once the news is released, they suffer less of a volatility crush than monthly options do. The Greeks' weeklies are inherently offer a greater delta. Weeklies don't suffer from high theta. Time value is less of an issue. Cheaper prices means you can purchase more contracts for the same investment. Additional Greek benefit is that gamma is explosive with so little time value. And quick price moves before the market can change directions compounds the benefits and the leverage of option trading. And recently, in the last year or so, exchanges have received permission to be able to offer weeklies 5 months out in time, but you don't want to buy too far out, or you might just as well be buying a monthly expiration. So that covers in a nutshell, really, the benefits of weeklies. And so putting these elements together, option trading, the utilizing weekly options, and now my patterns are the three elements that I'm going to start adding indicators to a chart so that you can see the pattern. $11. And this is revealing to you the steps that I use on a daily basis that often double my money in 4 days or less. Now, many of the charts that are posted on the slides here go back to last fall and December and so on. But these patterns are not unusual. They're not rare. I have been trading the last few months, couple months and weeks. These patterns have just set up regular, one after another, up, down, up, down, up, down. It's been fabulous. So there's always some losers, and there is risk. But when you win most of the time and have your stops in place, the winners end up outpacing the losers. That losing a trade here and there, that's just part of the game. It happens to all of us, that the market just doesn't cooperate and it turns on a dime and you get out. I hear from traders every single day who are experiencing great success using these steps and the patterns, and for many it has been life-changing. They maybe are able to quit a job or fund a retirement account or send a kid to college. That my strategies are for the everyday retail trader. That's what I figure I am. I have to kind of laugh at the title on this, the grandma strategy or the grandma trade. I am a grandma. Actually, truth be known, I am a great grandma, and that is kind of disconcerting at this point. I don't feel like I remember that I'm like the way I remember my great grandmother. But anyway, it is what it is, and I love him to death. It's awesome. Most of these trades we're going to talk about investing about a $600 trade, because that is like just a normal, good average, using good risk management for just a moderate size account. So let's start building what we've developed here so far. That I've discovered that a 2.5% to 4% equity price move equates to a double in weekly option premium. So the point of this is to focus on stocks that are going to have big moves. And so the price surge system shows you exactly how to do this. And we're going to look at an example in a chart here for Home Depot. That let's say we purchased calls mid-trading day on September 30th for $1.55 per share, or $1.55 per contract for the October 15 monthly, which was just 2 weeks out in time for the 115 strike call. And let's say we bought 4 contracts for a total investment of $620. That's right in that $600 range. And you sell at the end of the day on October 13th, 3 days before expiration, and the call contracts were then worth $6.15, or $6,150, for a gain of $5,530. That's 892% gain. That's incredible. Home Depot's price when you entered the trade was approximately $112.50. When you sold, it was $121.50. So that's a $9 change. That's a hefty 8% increase in the stock's price over those 10 trading days. Yet the option increased 892%. So for those 10 trading days, you controlled $45,000 in Home Depot stock. That's 400 shares at $112. And you did that for a total investment of $620. That is where the leverage of option trading comes in. All right, let's look at the chart. This is Home Depot's chart. And so we're going to start adding things to it. But what tells you that this is ready to explode? That you could actually kind of draw a line straight across. Crazy. I'm not much of an artist here with this pen. But it was kind of in the trading range here, up and down, and then it broke down. So what's going to tell you that this is now ready to get going? And we're going to add some indicators, and we'll show that. This is the PPO. This is the percentage price oscillator. And a lot of traders don't know what this indicator is. I really, really like it. It is quite like the MACD, the MACD, and many traders use that. That price trades in the direction that the black line crosses over the red. So here it's crossing up, and you can see that price goes up. Here's another area it crossed up, and you can see that price goes up. Here it crossed down, and you can see that price went down. Here it crossed down again, and price went down. So that's easy to read, and we're going to add to this now that Home Depot's chart is creating what I call a squeeze pattern. And what I have done here is to add the ADX, Average Directional Index, to the chart underneath the PPO. And what I am calling a squeeze is this right here, where the PPO line and the ADX line come in together. They're squeezing in together. And I have discovered when you have this pattern and that they then start pushing away from each other, price goes up. And let's look at how this worked out. So here we are. This is just giving it a little more time. This is the same squeeze where the lines came in. The lines are spreading apart here, and price goes up. You can actually see another little place right here. Here the lines came in together. They pushed away from each other, and you can see that price went up. Okay, let's expand this a little bit farther. This is the exact same time, and it just continued and continued on up as the lines moved away. Okay, let's check this out. And here I've circled it already. This is Boeing. You can see that this is the place that I'm talking about. This is where the squeeze is. The lines have spread apart, and you have price move up. Look at another example. This one, there's two of them actually. And we're going to discuss this a little further, but not every squeeze is the same. This one happened, and it kind of got started, and then it just flattened out. That there's other confirmation indicators that would be added to this in the book over all of this information. So look at how that happened, that the lines spread apart and this went up. And I have no doubt at this point, even with me just covering this quickly, that you will now be able to put those two indicators on your charts, and when you see this happen, you will be able to spot it and know what to anticipate. Here's another one. This is Goldman Sachs. And price went up as the lines kind of push away. All right, this is a brand new one. I didn't want to do all ones where it looked like it was in hindsight. I wanted you to see what it would look like as one was forming. And so the lines can come very close together. They'll never actually touch, but then when the lines push away like this price is going to go up, and you're going to have one candle after another heading upwards. All right, here's Visa. That's the one that we just looked at, and this was the area, and the lines are moving, and price goes up. And so again, this is the PPO and the ADX. They have nothing to do with each other. Their formula and the way they are calculated and figured there's nothing that really connects them. Their readings are individual for each equity. It is a visual pattern, and that's why I'm saying that I come at this from a different direction. I come at it from as an artist and picking out patterns that not everyone is able to see or has noticed. That again, if you'll remember that a 2.5% to 4% equity move often equates to a double. And so in the purchase that we just looked at in the trade for Visa, had we purchased calls mid-trading, midday in the morning after open for $1.23 per share, or $123 per contract for the October week 2 that expires the second Friday of October, the 69 strike call, and let's say you bought 5 contracts for a total of $615. Again, keeping it in that $600 range, and you sell on October 9th on expiration days. The call contracts were then worth $4.70, or a total of $23.50, and that's a gain of $17.35. So that's 282% gain in the price of the option. Visa's price when you entered the trade was approximately $68.50, and when you sold it was $74. So that's a $5.50 change in the price of the stock. That's 8%. So it's well over the 4% increase that I was discussing. And this trade lasted 10 days, and the option increased 282%. So again, this is an awesome illustration of the leverage of options, and particularly weekly options. Now, this is a chart of the IWM, the Russell 2000 ETF. And again, here's a squeeze pattern, and the lines pressing away and price moving up. Now the point is this pattern forms on anything. It forms on indices, in the indexes, ETF, in stocks of every price range. It's not a rarity. This is a 15-minute chart for Monsanto. So here we have the squeeze formed, the lines pressing away from each other, and prices is going up. So that it's not just a daily chart or a 60-minute chart. Here this is a 15-minute chart. I think the next one's a 5-minute chart. So here's a squeeze that happened. Again, I get redundant here with pressing apart, price goes up. Same deal. When the lines push away from each other and you have the PPO cross up, price is going up. So when you see a chart like this, and of course, like I said, you're going to want the confirmation signals. I'm going to show you a couple in just a minute that are going to show you why you want that. But the lines come in close together. This is your alert. Then when the PPO crosses up and the ADX swings down, you're going to have price move up. Okay, here's the reason I wanted to show you this, is that you want the confirmation signals. Here you have a squeeze, you have a squeeze here and a squeeze there, and they have started as far as the spreading apart, but look at price went flat, and it dropped a little and it went flat again, dropped a little and went flat. That these squeezes were not quite ready. They did not have the, even though it was a nice tight pattern, it didn't have the pressure that you need. It's almost like a pressure cooker where it's going to explode out of the top. And here's another one that just couldn't get going. And again, this one got started. You can see it went up a little bit and then it dropped and it re-squeezed. That's what I call this. And now this might actually be the real deal on this one where it's gotten started. And I cover all of this in the book. I cover all of the confirmation signals. It's so easy to see on a chart. The way that I write my books is almost like you and I are sitting across the kitchen table from each other, and I'm saying, see when this happens, and see when that happens, this is what to expect, and so that even though we're discussing complex indicators and subjects, there isn't any reason that you have to get bogged down with all of the complexities. You can make it very simple and easy for most anybody to understand. So our goal here is to be able to have the weekly options, have stocks that have big moves, and to have the expiration and pop it out in the patterns and have it come flying out the wide end of the funnel here. This is, again, the normal. You have your equities, the pattern, the expiration, and profit comes out the narrow end. Well, when you have weeklies and front month and stocks with large moves and the patterns, both long and short, you're going to end up having big profits coming out the wide end of the funnel. So now we've discussed what I call the P3 squeeze. The first book I wrote was called the P3 System, and it showed the squeeze on a daily chart. And once I started doing a newsletter for the P3 System, all of a sudden I was seeing it went through stages, the stages of the squeeze that I didn't know about when I first discovered it was the fact it told you to stop, it gave you second entries, it told you a time where you could kind of relax and take it easy. As long as the lines were doing this, you could just settle back, gave you your exit, and this is all now discussed in the price surge system. So we talked about the P3 squeeze, so let's talk about the P3.5 pattern. That's the short pattern that is showing you when a stock is going to drop and drop consistently. So we have the squeeze. It's not quite as obvious as the long trade, but we have the PPO crossing down, and that is your signal that price is going to start down. But the main pattern is this one, where the lines press away from each other, and that is where the big drop comes in. That was U.S. Steel. Let's see. Here's another one. This is UNP. This is Union Pacific. You have the PPO cross down. Eventually you have the ADX and the PPO that are pressing away from each other, and price is going to drop. Again, this is a visual pattern that the ADX and the PPO don't have anything to do with each other. So price surge system, what is in the package, if you want to call it, is a book. 145 pages with lots of illustrations. There's also a DVD that where I talk about the patterns and go over the details. It talks about how you can have alerts and confirmation signals. And again, it talks about the stages. So if you miss the very first entry, there's a second entry, your stop, time to relax, exit. And then there's also the alerts and confirmation signals for the P3.5. And it too is a very clear picture. So what really helps us to be able to push those profits through the wide end of the funnel is the fact that you're focusing on two patterns, that you're having a pattern that is showing you when a stock is getting ready to move up, and that you're showing when it's getting ready to move down and then back up again. And so it's like riding a wave, that many times you can just trade the same equity that moves over and over and over again, so that you can zero in on stocks that are going to have consistent big moves. And again, the book tells you how to do that, and have your trade list. And then if you find maybe like I traded Verizon today. I was or the other day, and I was in and out of it a couple times within one day, and it was the perfect price stock. I was able to buy 10 contracts and have about a $600 investment, and within an hour and a half or so, I made 75%. Then I got out and I wrote it down and made another 75%. And it was like the perfect priced option for my trading style and for the patterns that were going on that day. So another element that helps to make this system even better, and I hear from traders all the time, they say, well, that's great, Wendy, that I get your patterns, I see your patterns, I understand how they work, I follow you on the stages, I get it about that one time frame can give you an alert, and then the confirmations are on the next time frame, and I get all of that, but I don't have the time to go through dozens of stocks, hundreds of stocks looking for these patterns. Well, within this program, I also do a newsletter, and it comes out on Mondays and Wednesdays, and there's a list of patterns that are early, so you can watch for the alerts and the confirmations that are starting to create the P3 and P3.5 patterns. So in essence, the work is kind of all done for you. The book explains everything. You've got the DVD, which is another visual in addition to the book. Then you have the weekly newsletter that comes out twice a week, Monday and Wednesday, and you're able to then focus on the patterns as they develop. And that way you always have a trade that's brewing. Whether the market is going up or down, you're able to capitalize on what the market hands out. And that is the, I guess, the element of success. That again, I will give information here that you haven't asked for, but I can imagine you might be thinking. I hear from people all the time that say, isn't there a scam that you could run to find this pattern. And I have really not found a good one or been able to create a good one. And the reason for it is the values on the PPO and the ADX are different for every equity. You can do a scan for, you want every time the PPO crosses over its signal line. Well, that's easy, but you're going to have a million false moves. So what is the one that's going to give you the visual of the squeeze? And that is the thing that has not really ever been developed. So how do I come up with the patterns then for the newsletter? Is the fact that I employ my son Patrick, and he watches the charts, knows the ones that are big moving stocks, and he will gradually, as a stock drops and starts forming a P3 squeeze, it goes on this list and then it goes on the next list, and he juggles them around until when it comes newsletter day, I'm able to go through these lists of charts, and I can select the ones that look to me like they are getting ready to have the move. And those are what get listed on Monday and Wednesday when the newsletter goes out. And it's posted on a website, and you have access to that, and you can just go to it whenever you're ready to look at and work to see what works for you best. So if you're interested in information, this is a phone number, a support email. I have a website, wendykirkland.net, lists my various strategy books. But today, for attending, I have a special offer, and I think Yana or Raleigh will post this link, because otherwise you'll have to copy and paste. I don't think it's a clickable link. Thank you. I appreciate it. And when you get to this page now, and the information will go over some of the things that we have talked about today, be sure that you check for the special pricing. Raleigh, I have a feeling that there was some questions as I went through. I wasn't paying real close attention. Were you able to spot any?
Yeah, absolutely, Wendy. And once again, thank you. I think you did a very thorough job, but there were some questions. One of the first questions that came in was from Joe, and he said, hey, is there a simple way to scan for the squeeze, or do you have to look at one part at a time? And I think that's really what you do in your newsletter, right?
Right, that is exactly it. It didn't start off that way, truthfully. When I first wrote the book, it was just a strategy book, and I had so many people say, I work, or I just don't have time for this. I have my own life, and I need some help with this. And so I came up with a newsletter, and at the time my son had graduated from college, and he was interested in working with me, and so that has become one of his responsibilities, is to help me come up with a way to be able to list the patterns as they're forming.
All right. And I tell you what, given the choices out there, I think that's a fantastic service. Now, Gerald asked a question, and I think, I don't know if it was a statement or a question, but I think it was a question. He said, the closer the squeeze, does that indicate the potential of the better a move? Is there a relationship there, Wendy?
There really isn't. That it sounds to reason like if they were very, very tight, that there would be a bigger explosive move. But sometimes those are stocks that have dropped so far that they will get started, and then they will have to come down and test recent support before they get going again. And there are other times you can have a squeeze that is less tight, and it will be the one that really has a big, big move. And when you think about trading and the logic of it, that all kind of makes sense. That if you have like Apple, that has just dropped over the last few days, and it is creating a squeeze at the moment, but it probably, as it gets started, will have to come down and retest those lows before it's actually ready to go. And you could have another stock that just had a modest kind of pullback that helped create a squeeze, and then when it's getting ready to have that explosive move, it'll go farther.
All right. Um, Let me see here. Renee said, if you do weekly options, how do you catch more of the upward movement of the stock?
Okay, the point is really once you understand these patterns and once you become very proficient on um, looking at them and spotting the crosses and having the confirmation signals, then you're buying the weekly expiration that is going to allow for you to capitalize on having that move take place without then having too much time decay. So it really depends on what time frame chart you're looking at. If I was looking at a 30-minute chart, I might buy the weekly that's 2 weeks out and have 1 week be the week that my trade is developing, and the next week I would sell before that week, which would not get into the escalating time decay.
Okay. Chris was wondering if there is a specific time frame that works best, like a 30-minute or a 60-minute chart. Do you have a preference or a recommendation there, Wendy?
Well, I know what I prefer, and that is the 30-minute, but that is because I'm one of these crazy people that sit in front of the computer all day, and that is not right for everybody. So let's say that somebody works, a regular job, that they could use and apply these patterns to a daily chart and just check them in the evenings or and on the weekend and kind of go about their daily life. Yes, it can be done on a daily basis. It can be done on a weekly, and you could buy leaps. So that's what I was trying to point out on some of the earlier slides, that the patterns work on any time frame. I'm sure there's maybe some day traders in here, and you can use it on a 10-minute chart, on a 5-minute chart, and they unfold and do the same thing on every time frame.
Sure. We also had, and you probably wouldn't be surprised to learn that we have many traders in here that trade futures and Forex. And there was that, the obvious question that says, hey, does the concept of using the PPO and the EDX squeeze, do you have any thoughts of whether or not that's effective when day trading those markets?
And the answer is yes. That these patterns truthfully work on anything that can be charted. I have a number of friends that use the patterns on Forex. I just know a couple people that I'm close with that trade futures, and the patterns apply to anything that can be charted.
Okay. That's terrific. And there was a somewhat related question that's natural here, and that is, to the best of your knowledge, is the PPO a widely used indicator? I think you said was it the MACD is a sort of a surrogate for that? Could you
Right,
explain that
that's
again,
right.
Wendy?
Many of the different brokers offer PPO, and I like the calculation of it, the fact that it's percentages. But the MACD is very, very close and can be substituted. Um, and not that I want to talk about any one particular broker, but I know a lot of people use Thinkorswim, and that is one that doesn't offer PPO, but there are a number of traders that have calculated it and have figured it out, and if you search, you can find it. And if you do a search for PPO, you'll find it.
Okay. Then Wendy, towards the tail end of your presentation, there was a fair amount of questions that came up about your special offer. And for example, Bruce said, hey, the 197 is the book, it's the DVD subscription, and for how long is that? Is that like annual, quarterly?
Uh,
Laura was wondering if there's an extra cost for the newsletter, and I was wondering, is there a way you can
it's a
make available
package.
this offer?
Sure, I'd be happy to. It's a package deal. You get the book, you get the DVD, and you get 3 months of the newsletter. And again, that comes out twice a week. And from that point on, it's renewable quarterly. I think
So
that
book, DVD, and 3 months of the newsletter.
right.
Perfect, and that's for $197. Then it's renewable. Um, and Lori said, so the newsletter suggests the picks, but do you also suggest which option to trade, or is that really up to the individual?
It really is up to the individual, but the book totally goes over that as far as which expiration is advisable to trade, which strike price works out best usually, and so on. So these are all details that are covered in the book, and that makes up the total details of the strategy. So if you were to trade daily, you would be buying monthly options and so on. So all of this is explained in the book and goes over all of those details. There isn't anything that is held back, like the special key is not mentioned or whatever. You get everything you need.
Sure. A couple of questions that also came up, based on, what you're showing here and the fantastic potential of this. As it comes to your own trading there, do you publish any results along these lines? Do you share that with folks?
Yes, you can get that from support if you email that address that was posted earlier. That I do an advisory on this, and I think that those are the results that they share.
Okay, terrific. Um, let's see here. Another question is that, if somebody were to take advantage of this special that they have, and then the next quarter comes up, what's the price of that second quarter?
I believe it's a repeat 197 for the next quarter for the monthly newsletter. In a sense, it's like
Okay.
you're getting the book and the DVD free to teach you the strategy, and then the newsletter is really the value because it's my time of going through all of the charts and doing that work for you to list
That makes
everything.
sense. So to restate, folks, because some people ask for the price. So the newsletter is $197 per quarter. And the special here is that there's the book and the DVD that goes with that, and then it renews. I think that's terrific. Another quick question here: broker recommendations. Somebody said, "Hey, I'd hate to work with somebody just to find out that they don't have the PPO." Wendy, do you mind sharing which broker you work with, or do you recommend brokers?
Actually, per SEC rules, I'm not supposed to recommend any one particular broker. Like I said, if you Thinkorswim, you can do it. Options Express does it. I'm trying to think. I think eOptions does it. MoneyBlock has it. That
Okay. So
like I said,
it's
if you
fairly
can't find the
widespread. Yeah.
right, it isn't anything unusual. The PPO is a little sometimes tricky, but then the MACD does exactly the same thing. So you can
Sure.
put the MACD and the ADX and have it work. I'm reading the note here. It says earlier it said Thinkorswim didn't have the PPO. They do not list it. The company of Thinkorswim does not list PPO as one of their indicators. They do have MACD, but if you were to research on the site, do a scan or a search within there, I've had so many traders want the PPO that there was some traders that developed what the parameters were for the PPO, and so if you search, I know that it's on there.
Okay.
The other thing I was going to mention is I'm seeing the reference to stock charts, and that is my preferred charting site. I love the colors. It's just the artist in me, and I love it. That They have a free charting service that allows just a few indicators, not all of those that I might use. I think I might use 4 and they allow 2 or something like that. But their monthly subscription is $15, I think. And I figure that is the best $15 I spend every single month. And besides that, I can deduct it. It's a business expense. And, from what I make, and to me, what I want is clear visual images of when it's the proper time to get in and when to get out. And so to be not pay $15 a month because I want to use my broker's free charts or something, I figure that's kind of silly. But so I wouldn't let not having a PPO be a stumbling block for me, I guess is what I'm trying to say.
Exactly. No, that's excellent. Let's see here. Terry said, "Is there a mastermind group to trade with?" Or I think you're asking, do you have like a trading room or a forum or something along those lines, uh,
Uh,
Wendy, that's associated with you?
I do have I have 2 chat rooms. I have one chat room that is kind of a bridge for all of my strategies. It's free, and it's a great place to get clarification or questions answered. Traders hang out in it and discuss the various strategies. And I'm in and out so that I can answer questions. If you didn't understand something from the book or whatever, I would be able to clarify it, or somebody who trades the system would be able to clarify it. I do have another um, chat room and strategy that again trades these patterns, uh, but only phases of them and only 30-minute charts, and that is called Prime Entry Profits. And it's a chat room that just focuses only on those like micro stages of the T3 and T3 and a half.
Okay. Well, terrific. Well, it sounds like you offer comprehensive services, and I think Wendy, I'd really like to thank you for your presentation today. I really like how you so logically presented the benefits of trading weekly options. And I know you said you're on a mission to to help people understand more of the advantages, and I and I like that. Tips like how to use the PPO and average directional index, the ADX, to spot a squeeze pattern. These are invaluable. Engaging when a market is getting ready to break out, and it's just one of those things that you can use right away. I mean, folks, Wendy made that statement. You add these things to your chart, look for these things, and not only for options or stocks, but they can be applied virtually against any market. As she said, any market that has a chart can use that. I also like, this tip about, looking for an equity price move of about 2.5 to 4%, often doubles the potential reward from a weekly option. That's also a pretty sweet tip right there. And I think Wendy's special offer of 197 for her 3-month letter, the book, and the DVD is just a great way to learn more about how she trades the options markets. And as she just mentioned, she also has trading rooms and other services there to help you. So I think my biggest takeaway from my sessions I do with Wendy is she's so sincerely dedicated to helping people understand how to trade the options markets. She has the benefit of going through just a horrible calamity and pulling herself up by her bootstraps. I just think this is an incredible success story, and I very much appreciate the time that she has taken to be with us here today. I also want to let everyone know that today's session has been recorded, and we will send everyone that registered a link to this recording no later than tomorrow afternoon. So with that, folks, this brings our webinar to a close, and I hope you enjoyed today's presentation. I'd like to thank Wendy for the time that she took to prepare and give her presentation, and I want to, of course, thank all of you for coming today and helping to make this a very successful session.